show. This is your host Vaibhav. In this late session on the Friday evening, we will be considering one interesting indicator. The name is Choppiness Index, which helps us in determining whether to trade, whether to enter into a new trade, or simply to sit on the sidelines. And on this session, you would also like to know how we can utilize this indicator to look for the opportunities in the market and when to ignore some trading signals and when to go in for the new trade. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart with each candle period defined at hourly. To add this indicator choppiness index, all you have to do is a quick search. Here it comes. Okay, and we have this indicator at this bottom side of the chart. The logic is simple. It tries to measure the choppiness or the trendiness of the underlying instrument. If the underlying instrument is trending, whether it is going up or going down, it is not of much concern to this indicator's output value. The only thing is this indicator is going to help you with is if to consider the markets sideways or to consider trending. So you can use this indicator to see if there is a significant momentum. It can be on the bullish side or it can be on the bearish side. You will need other filtering mechanisms, other trend finding mechanisms to determine the direction of the trend. But for figuring out this trendingness, you can utilize this indicator. And if the underlying instrument is simply going sideways, there is not much of a momentum, then you can certainly utilize this indicator for deciding the duration to sit out of the market. The reading is simple to read. Higher the value of this index, the more markets are considered sideways, and if this output value is closer to zero, is lower and below this threshold of 40 on the lower side, then the underlying instrument is considered strongly trending. We use Fibonacci ratios, the 38% and 61%. So above 61, the underlying instrument is considered sideways, strongly sideways, and if the output value of the choppiness index is below 38 level, then it is considered in a trending scenario. You can say it is in a strong trend. And if the value is in between these levels, then you will have to pay attention to these directional movement of the output value of the choppiness index. If it is rising, then that means the choppiness is increasing, and if the underlying instrument is now showing the signs of trend picking up, then we will have the choppiness index value starting to decline. So you will always have to pay attention to this output value, and this makes our assessment quite easier because all we have to do is look at this direction of the output value, and we get a good idea of how things are shaping up for the underlying instrument. And as you can notice in today's session itself, when we had this extended period of consolidation with Euro USD not really going anywhere. It was consolidating in this narrow range of around 20-30 pips. So we had this choppiness index picking up, and it stayed that way for quite a amount of time. But eventually, as the momentum started to peak up, we saw this steep decline in the choppiness index, particularly after the start of the European trading session. We saw this decline. But even in this instance, you can notice that we didn't really see any scenario of strongly trending market for the Euro USD. So this output value of the choppiness index remained above our critical marker on the lower side. So that is something to consider in this today's session, where the Euro USD went both ways. First, earlier in the day, it was rising after the consolidation on the lower side, and then eventually it started to decline. But in all this, it wasn't really trending strongly on either side. So that is the fact which would have come to our attention immediately if we were to rely on this output value of the choppiness index. But if we go back in yesterday's session, then there was more semblance of the strong trend earlier. We had this choppiness index dipping closer to this lower threshold. It didn't really decline, but it was almost there. And after again picking up, it started to decline, and finally it dipped on the lower side. And that strong momentum kept the Euro USD tethered closer to these lower range of these price for last couple of sessions. And if we go back here, whenever the underlying instrument goes sideways, doesn't really move much, we get this choppiness index value dipping, rising quite significantly above this higher threshold. And when we have this output of the choppiness index in this territory below this critical marker lower line, then you get to see these price momentum, price volatility also being one-sided, and the market shows us that there is this indicator which we can utilize reliably for deciding when to take the trade and when to sit on the sidelines. And also, you can notice that these moves, and you can even say moods of the market are for are phase bound. You will see that there is consolidation phase for a certain amount of time, and then the markets trend. It is not an easy task for us to say when the trend will change into sideways or when the sideways markets will give way to trend. That is a very difficult task, but we can clearly utilize this indicator to make the assessment of the existing scenario, and then we can anticipate the change whenever the initial signs of change emerge, and we can look at the output. So if from the lower levels choppiness index starts to rise, that means the market is now starting to go sideways, and we should pay attention. And vice versa, when the choppiness index starts moving on the lower side from the higher side, that is also a signal that the underlying instrument is now likely to trend after having remained in a consolidation phase for extended period of time. So you can make this assessment using this indicator and take the trades accordingly. Now let us see what we can do in terms of the customization of this indicator. It is taking some time to respond. For this indicator, we will be able to vary its calculation period and also applied price. Let us wait for a few more seconds. Okay, all right, we got it now. So there is nothing we can do in terms of the applied price, but we can vary its calculation period. 14 is generally used as the default calculation period, but if you want to increase the calculation period, you can do that as well. So all these options are provided here. You can even go higher to say a calculation period of 50. So depending on how the price action has been for this many candle periods, the indicator will be plotted, and only for strong trends you will see these output value changing scenarios, changing course. Output, let me now restore it back to 14. Output value, we can have this color combination changed. That is also a possibility. Styling can also be varied. There is this width option, transparency factor. So all these options are there. Levels, we have these two levels determined as per the Fibonacci ratios in place. 38.2 on the lower side and 61.8 on the higher side. Advanced editing option, recalculate on new candle only, highlight the time period zone, and calculate from the custom data. First two options are not going to make much of a difference, but this third option, calculate from custom data, is quite important. You can choose these options of going to use the instrument from the chart or defining it. The same applies for the candle grid and the spread side. So in this candle period option, you can have the indicator calculated independently of the chart by simply defining the candle period to be used for calculation. So then the indicator will be plotted independently of the chart's candle period. Show indicator on all the periods. Suppose if you want the indicator to be available for all the candle periods, whenever you change it on the chart, you can have this option, or else you can even specify on which particular time frame you want this indicator to be available, and only on that time frame this indicator will be available. Base period is not going to make much of a difference, so this option is not that useful. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. Thank you all for joining in. I will be back on Monday in a new session with equally interesting indicator to work with. So do come back. See you next time around. Have a fabulous day and a fabulous weekend ahead. Thank you all for joining in. Goodbye.